Hello and welcome. In the previous video, we learnt about hammer candlestick pattern, and in this video, we will learn about shooting star pattern, which is exactly the reverse of hammer candlestick pattern. Alright? Now, if you remember how a hammer looks like, then you can see that this looks exactly opposite of that. Correct? Now, let us look at the rules that are to be followed while considering this as shooting star. Okay? Now, the candlestick should appear or it must appear at the top of an uptrend, meaning we need to have minimum of 4 to 5 candlesticks which have moved up, and at the top of that we need to find a candle like this, or a candle like this need to appear at the top. Okay, so that is the first point. So we need to have minimum 4 or 5 green candlesticks, or the price should have moved up, and at the top the candle should appear. This candle should appear. Wick must be more than 2 times of the body. This is the body. This is the body. The wick that you see must be more than 2 times of the body. Okay. This is the length of the body. More than 2 times must be the wick. Body of the candle must be small. So this body must be small. It is good if it is still smaller than this. Okay. Next, should not have lower wick. In hammer, we should not have upper wick, but here in shooting star, we should not have lower wick. Okay. And red candle is more powerful than green. This candle is more powerful than green. For that, we need to understand the psychology of this candle. So let us do that. What is happening in a shooting star? Shooting star is appearing after an uptrend, correct? From previous 4 to 5 days, buyers or bulls were in control. They moved the price up, up and up. And let us say today the price opened here. Price opened here. The bulls took up the price. They moved the price up and up till here. But when they reached this level, bears were waiting, or the sellers were waiting, and sellers with all their strength pushed the price down and down. Okay, and by the end of the day they were able to close the price here. So this is opening price, this is closing price. Okay, now let us consider the red candlestick. Buyers were in control from previous 4, 5, 6 days. They moved the price up. Okay, and let us say that today the price opened here. Buyers who were in control from previous 4 to 5 days moved the price up and up till here. And at this level, sellers came with all their strength and pushed the price down. Okay, pushed the price down, and they moved the price below the opening price and they closed it here. Okay, when you compare this and this, here the sellers were not able to move the price below the opening price. They were able to move only till here, whereas in this case the sellers were able to move the price way below the opening price, and this is why red candlestick is more powerful than green. Okay, now these are perfect shooting stars, and we rarely get to see perfect shooting stars in the market. So what we have to do is we have to adjust with these, or we have to consider these as shooting stars too. Okay, so you have long wick here, small body, and small lower wick. Okay, so these two are also considered as shooting stars. Of course, this has a different name, but let us not go there. This and this are also considered as shooting stars. So you have upper wick, which are more than 2 times that of the body. The bodies are small, so this condition also satisfies, but you have small wick here. Okay, ideally we should not have, but in reality in the market we will get these. So we have to consider these as shooting stars. Here the body is big, but then the wicks are more than 2 times that of the body, and we have small lower wicks. So these two are also considered as shooting stars. Okay, but these are not considered as shooting stars. You have a small upper wick. The upper wicks are not more than 2 times of the body. Bodies are also big, and you have big lower wicks. Even though the shape looks like shooting star, they are not shooting stars. Okay, here the body is fine, you don't have lower wicks, but the upper wicks are very small. The length should have been more for us to consider these as shooting stars. So here they are not more than 2 times of the body. Okay, here too the body is small, we have small lower wicks, but the upper wicks are small too. So we will not be considering these as shooting stars. Okay, now the area where we will be looking for shooting stars are here, and here. Okay, so these are minor trends, this is major trend. So we generally look for shooting stars or candlestick patterns at the end of, or at the beginning of, in this case, minor trend, or at the beginning of change in major trend. But generally they work well here and here, and also if it is a downtrend, they work well here and here. Okay, now let us look at few examples. All right, in the previous video I had taken few examples, the number was good, but here I will take only less number of examples. Okay, now let us look at this. The price was moving up, okay, from 1 2 3 4 5 6 7 8 days. Okay, from 8 days the price was moving up, and then you see a shooting star, and this shooting star satisfies all the condition. It has small body, small lower wick, ideally it should not have a lower wick, but it is small here, and a wick above more than 2 times of the body. Okay, length is more than 2 times of the body. So this satisfies the condition of shooting star. Now we can take 3 types of trades. One is that as soon as you detect a shooting star is happening here, you can enter a short trade. Okay, that would be considered risky. Or one more is, you can wait till a candle closes below this level. That would be safer. The safest would be to look for a resistance at this level previously. Okay, look before and see if you can find a resistance, or see if you can find a level which is almost equal to this, where the price had reversed its direction. Okay, so if this is at that particular level or resistance level, then it gives you more confirmation. All right, so the exact same thing that I had explained in the hammer. All right, now this would be our stop loss and this would be our target. The area from where the price started moving up. Okay, and in this case the price has moved down and our target has been achieved. Okay, so if we consider this, the candle closed here down, so we could have entered here, and the trade went in our favor. Okay, now if you look here, you can find many candlesticks which are of the shape of shooting star. For example, if you look at this candle also looks like shooting star, but it is not coming after an uptrend. Okay, it is not coming after an uptrend. Of course, here if you look at it, it is a small downtrend. Okay, small downtrend. So we need to have shooting star after an uptrend, and only then we will consider it as shooting star. Here, even though the shape looks like shooting star, it is not a shooting star. Okay, so we would discard this. Here if you look at it, this has the shape of shooting star, but we do not consider this because it is not coming after an uptrend. For an uptrend, you need to have minimum 4 to 5 candles which have moved up. Okay, here you can see the market is flat. Okay, or within range we can say. So this would not be considered as a shooting star. If you consider this candle, it looks like a shooting star, but it is not coming after an uptrend, and so we do not consider this. Okay, so the rules which I have explained must be followed for us to consider any candlestick as shooting star. All right. Yes. Next, Britannia. The price was moving up. And we see a shooting star. It satisfies all the condition. So we can enter any type of trade, either risky, safe, or the safest. Okay. This would be our stop loss with some buffer, and this would be our first target. Okay, first target. And here you can see that our stop loss has been hit. Okay, our stop loss has been hit. So this was our shooting star, and if we had taken an entry here after the close of this candle, it only moved till here. This is also a pattern. Let us not go there. It moved up and our stop loss was hit here, and then it moved down. Okay, so this is the use of stop loss. Even though all the conditions were satisfied here, the trades may not go according to our prediction, and that is why we keep the stop loss. Okay, so this is a case of stop loss. Next, Bharti Airtel. Okay, I have taken this for a particular reason. So the price was up in uptrend here. We'll look at a shooting star and we enter. This would be our stop loss, and somewhere here is our target, and our target is achieved. But look at this. What is this? This is a hammer, correct? So we learnt about hammer in the previous class. So hammer and a candle closes above it, and you can expect target as this. Okay, this level. All right. So you have a shooting star, you have a hammer. Next, Britannia. Price was moving up. We find a candlestick which looks like shooting star. If we had entered the trade, it would have gone in our favor. But this is not a shooting star because this doesn't satisfy all the conditions of a shooting star. It is coming after an uptrend, so that condition is satisfied. But look at the shape and size. The body of the candlestick must be small, but here it is big. One thing, it should not have any lower wick. It has a lower wick, but lower wicks of small sizes are acceptable, so that is fine. But look at the size of the wick. It is not more than 2 times that of the body. So we have a wick here at the upside, but it is almost similar to the body. So this shape is not a shooting star, or we can say The shape looks like a shooting star, but it is not a shooting star. And even though the trade has gone in the favor of it has gone in the favor of this candle, this is not considered as shooting star. All right. Yes. So this is it about shooting star. I hope you have understood the concepts. Now what I want you to do is look at few charts and try to find shooting stars in the chart. Okay.